Hi, it's Pascal here. So I'm very sorry, but I had no time to write a weekly comment over the weekend because we had some local festivities here with the last reconstitution of the Waterloo battle, and Napoleon lost again for unexpected reasons that the other parties were stronger. Okay, so instead of writing a comment, I will simply make a small video. So last week was quite a hectic trading week. We had options expiration, we had an index rebalancing, we had the Fed speaking, and of course the Greek situation. So today is a different day, different market, and the Greek situation seems to go positively because everybody wants a solution. So we need to see what is going to happen, and I expect that we will have breakouts left and right today. So today I will try to compare Google to Facebook. I think that if the market breaks out, everything will go up, and these two stocks could have some kind of upside momentum. So let's see which is better to trade. So first we go to the pyramid, and we can see here that Google has a rather strong general rating. It's not above 80, but it's kind of looks good. Okay, the effective volume pattern is positive, so yeah, it could break out of this range here. Okay, now let's look at Facebook. And Facebook, okay, it's basically the same kind of rating. Yeah? You see these are really similar colors, similar numbers, and the effective volume pattern is also positive. The stock is slightly pulling back, but if it breaks out about 83, up we go. Okay, there is however some long-term difference. This you can see it on the long-term chart. For example, this is the 2 years chart of Google. You can see that Google didn't do anything for the last 2 years. We could break out of this range. And if we look at Facebook, okay, we see that Facebook is better. Obviously, Facebook in uptrend, and if we go higher, there is less resistance than Google. So in theory, Facebook is better. So let's now move to the breakout calculator and see which of the two stocks will better respond to breakouts, because this is what we expect for today. Okay, let's see here. Okay, here's the breakout calculator. I will download Google. Okay, this is a long trade. Yeah, it takes some time. So I will test a breakout for the last 500 days for a stop of 2.5%. So not too wide stop. And now I have to decide on the breakout price. The high was 558. Yeah, exact. So let's try a breakout at 560. Okay, we click here on the calculation icon. Ah, okay, mistake. I forgot to indicate it's not a pullback, but it's a breakout. Okay, I indicate breakout. I have to clean this cell, and I click again here. It's 560. That is my breakout price. Okay, let's see how it goes. You can see this is much slower because we have to try many more occurrences in the past 500 days, and you can see that the risk return ratio is barely moving above 1, and I don't think here that it will be a good return, good result. So let's wait until this is over, but obviously this will not be a good trade idea for breakout. So we need a little bit of patience here. Yeah, about there you see the profit target loss ratio is 9.50. We will go to 10 and then we stop. Okay, so you see that the breakout risk return ratio for a breakout is 1.07, but if we use the breakout on volume for the same price, same conditions, 560, you see that this is slightly better. So 138, and let's take note of 138 for Google. So let's do exactly the same for Facebook. So I will download Facebook data. This is a long trade. Okay, I also use 500 days as a analysis period, 2.5%. No, I will not forget to change this to breakout, and we will test a breakout above. Here was 83.2 was the maximum, so let's say 83.5. Okay, 83.5. That also takes some time, but excuse me for that. Okay, telephone is gone and the calculations are already also done, so we can see that for simple breakout, Facebook already proposed a risk return ratio that is higher than Google. Google's risk return was around 1. Here we already have 1.79. This means that if I test now the breakout on volume with the same condition, with 83.5, will most probably have returns higher than 2. I hope so, anyway. Okay, we can see the risk return is increasing as the target profit loss ratio increases. And you can see that for a target that is quite high here of 100, so we can have really a long-term target. So a breakout at 83.5 leads to risk return ratio slightly higher than 2. And of course, you can also here use the sensitivity analysis to see to what point we can buy the stock. Is the breakout to 83.5 better than a breakout from 85, for example? So that is the way to use it. So I will click here, but this test takes some time, so I will pause the video and come back once the results are calculated. Okay, we are still in the process of calculating here the different entry price levels for breakout, and we can see that the higher the breakout, the stronger the returns. So I think Facebook could be a good candidate at almost any price above the current level of 83.5. So here's how the final results for Facebook is. Everything is green, and we can do exactly the same for Google. Let's see Google. I will click here on the sensitivity analysis, and we'll wait for the calculation to finish. Okay, here are the results for Google, and you can see that even if at 577 it was not too interesting, at 560 it was not too interesting to buy a breakout. As the price increased between 565 and 571, a breakout could be bought, but only breakouts on volume. Another figures that I want to show to compare both is the supply. If you can see here the Google supply, you can see that on the history, on the volume histogram, there is a strong support here and not that much resistance on the right side. And this you can see here that the supply shows that not many people want to sell. In fact, all these people are almost break even. So I don't think that Google will go down. And for Facebook, okay, it's here. Okay, Facebook has a slightly different pattern because you can see that the resistance here it's comparatively smaller for Facebook, and Facebook has a stronger support in this area. And because of that, the curve here is flatter than the Google curve, and this is only because Facebook is in an uptrend while Google has been between two waters. So the supply analysis tells us that both stocks are on a very low supply level, meaning that traders are not going to sell, but there is less resistance for Facebook than for Google. So okay, that's it for the video. Just a reminder, if you go on the home page here and you click on the pyramid, you have free access here to the pyramid data. Even if you don't have here the effective volume data, you still have a free access to the pyramid data. If you want to have access to the effective volume data, then you need a subscription to the end of the day or to the stock selection. Okay, thank you very much, and I will make another video later. Bye bye.